Well, next up, our friend, we're going to talk about getting a pre-approval so that you can find one of these homes that Ann is going to describe in a little while, or Mark has just shown us. So welcome back to the show, Jerome Niedorf.
Thank you, Rich.
You know, you can talk and talk and talk and talk, but a lot of people really do not understand the importance, especially in today's housing market, of walking in and said, I just went to Jerome or somebody else and I can qualify for $209,000. Why don't you reinforce that?
Okay, and it has to do whether or not the person is a first-time home buyer, or if they've got a home that they're selling that they're going to be moving up. Because I sat with a couple this past week. They had purchased their home that they're in 12 years ago now, and they got it for about $150,000. And naturally today, even though it's come back down in value, it's over $300,000 is where the value on it is. And in their mind, they think, hey, I can afford a $300,000 house. We can move up to a $550,000 without a problem, until they figured out what the payment was. It was more than they wanted. Now, had they sold their house and got an offer on it and then came and talked to me, and I talk about being homeless, they would have put their house on the market and then found out that the price range that they wanted was really more than they should be in. So, and we run into the same thing all the time the first time people go out to buy, and you use the example of $209,000. You know, you sit down and you take the income and you take the amount of money they have to work with and what their current debt is, and figure out whether or not it's a comfortable payment. A lot of people just assume, well, gee, the $209,000 or whatever the figure is has to be close to my rent, and then they find out it's double what they've been paying for rent. So they need to find out what they're doing before they go out and buy a house.
Okay, so they come to you and they say, Jerome, what do I need to come to you with, rather than just sit down and waste your time? Is there anything that they can bring that's going to help you expedite the process to give them an answer of whether they can or cannot afford a home?
Yeah, and we do it in actually two steps, because the first step is to call me on the phone.
Okay.
Because before they chase down to my office and whatever, we'll talk on the phone in generalities. Where do you work and how much money do you make? Okay, what do you have for other debt? Long before I ever pull their credit report, and I list their debt down. And then I ask them, you know, do you have any credit problems that you're aware of? And again, we deal with it on the phone ahead of time and say, okay, here's the price range you'll qualify for. Here's how much your payment would be. And they say, yeah, I think I want to do this. That's when I give them the list of what to bring down to my office to where we can actually do a loan application.
How important, or is there a number now for credit scores, or is that's lessened because of all of the other factors about how much you owe and all that sort of stuff? Has that changed the procedure for getting a loan, the credit score, or not?
Well, it does, because the first thing we do, we pull a credit report to see if there's a loan program that will fit them with the credit score that they have, okay? And you're hearing advertising on television now to get the best interest rates over 700 credit score. Typically, to do a conventional loan, you have to have at least a 620 credit score. And to do an FHA loan, it doesn't look so much at the credit score, but what their payment history has been for the last 2 years and what is out there if they've got credit issues. So depending upon where their credit situation is, depends upon the type of loan we put them into. And then if they're credit issues and they need to go conventional, there's an adjustment in the interest rate, but we don't know that until we pull credit and find out what they have.
My final question is that things have changed so much today. Have the companies themselves changed? In other words, 2 or 3 years ago, any mortgage banker, any mortgage broker could help them get a loan. Some of them were good, some of them bad. I'm not getting into that. But in today's marketplace, how do you find out who really knows, let's say, like what you know, because you really do know your business?
Well, you hopefully they get a decent referral from whomever they're talking to.
Good. Okay. So number one is to try to get a referral.
Try to get a referral from someone that actually did a good job. But by talking to them on the phone or sitting down with them in person, if you talk with them a little while, you're going to know that they may not know as much as they think they do. I ran into that situation where they were recommending they go out and do a certain thing, and I says, my goodness, don't do that. And here is why. And so yeah, they got to make sure they go to someone that knows what they're doing. A lot of the loan officers that got into the business when things were real busy and they really didn't have to know anything to do a loan, and there was all kind of programs. A lot of those people, a lot of those loan officers have gone back and they're doing valet or dealing cards or whatever they did before they became a loan officer. So a lot of those people have gotten out of the business. Most of what is left are professionals.
Okay. If someone needed to reach you right now, how do they do that?
Okay, my cellular is 595-4118, which is the easiest way to catch me.
Okay, we've sort of switched the 6 Steps Home segment into helping you get into that dream home with the right loan and the right company, and we're going to have Jerome back again next week. Thanks, Jerome.
Thank you, Rich.
Commercial time, then we're going to meet one of the reasons I'm really excited about the show. Her name is Ann Sylvester. She's got some incredible properties from Power Realty, so stay tuned.